Hey guys, Joel Frank here, market analyst for YouTrading, and today we're taking a quick look at spot gold prices. So let's jump straight into the chart. I've got gold here, 4-hour candlesticks, and as you can see, been under a bit of selling pressure recently. It's dropped in wake of the latest US producer price inflation report for November, which did come in quite a lot hotter than expected. The headline rate now at 9.6% year over year, which was quite a lot above expectations, which were for 9.2%. So hot inflation data weighing on gold. You've seen that it's dropped from the sort of 1780s and it's now under 1770. Broken below this sort of uptrend that we did have going earlier in the week, broken below last Friday's lows, and really eyeing these lows of the month here, which are around 1760. You can see that pretty much for the whole of December, actually, gold has struggled to get above the 1790 level. There's the 200 DMA, which you can probably just about make out there in blue. That's just above 1790. There's the 50 DMA as well. That's it there in green. That's around 1796. So there's been a lot of resistance in this area that has been capping gold's gains. But for now, are we going to bust through this December low around 1760? Probably not, I would say. Not on Tuesday anyway, and definitely not ahead of tomorrow's Fed meeting, because pretty much you can see we've been quite range bound the last couple of days between the sort of 1760, 1770 and 1790 areas, because we have been waiting for this Fed meeting. Recall a couple of weeks ago, Fed Chair Powell did indicate that the Fed are going to basically be more hawkish. They're dropping the description of inflation as transitory, and Powell said that the discussion about quickening the pace of QE tapering is going to happen, but there's also going to be new economic forecasts. There's also going to be a new dot plot, and the dot plot could potentially point, or is likely to point, to multiple hikes in 2022. So there is quite a lot of hawkish risk going into this Fed meeting, but a lot of that's already priced into markets, arguably. So just traders in wait and see mode before they want to push precious metals like gold any lower. If the Fed does come out with the hawkish guns blazing, because obviously we just had this very, very hot PPI report. We also last Friday had the consumer price inflation report that saw consumer prices rising at 6.8% year on year in the US. Well, then we're going to be heading lower, very likely, for spot gold. So if we zoom out a bit, we can sort of see the areas that you want to be looking at. There's this area back here around 1750 that was offering good support in early October, and then if that goes, then the next area you want to look at is around 1720. That's the late September lows. So yeah, guys, hope you enjoyed the video, and I'll see you in the next one.